Welcome back to another Zero DTE video, and today Ernie's going to be talking about changing with the market, so stay tuned for that. If you're interested in becoming a pro trader, check out the link in the description for a 4-week trial. And as always, I hope you enjoy.
We want to collect premium because that kind of takes away some of the price movement from us and allows us to concentrate more on that collection of premium. And we have that incentive to do it in zero DTE because it is decaying at its fastest rate in the shortest amount of time. So in other words, we can collect it at a time when it's collectible at the fastest rate in the shortest amount of time. And that butterfly gives us that ability. Yesterday, I talked about why it was really in our advantage to trade small risk, high potential profit trade, as opposed to taking a high probability trade. That there's no scaling in the high probability trade. There's huge scaling in the low probability, low risk, high potential trade. Scalability in terms of being able to make your account bigger and bigger. The other thing that these types of trades do for you is allow you to have very small drawdowns. All of these are great things to have. So we combine the asymmetric trade, small risk, large potential profit with premium collection. That's in the butterfly. That butterfly, we can adapt it to just about any market condition simply by changing its width or changing its position back and forth to the market. And there are some small, characteristics that we have to keep track of that maybe slightly alter our approach, but it's still the same thing. We don't have to resort to a completely different strategy because the market has changed. And that's the one great thing about this. The market is always changing. In fact, if there's one thing that is consistent or constant with the market, is that it is constantly changing. Now, our service and what we do here at Zero DTE is really attacking that one problem. How can you master a constantly changing market? The logo up here, which represents a Zen circle, that represents a term, impermanence. Impermanence is just another way to say that things are constantly changing. We manage that by putting on a process that is cyclical in nature, that is constantly measuring where we are, what we're doing, and then making improvements along the way, breaking the problem down into these tiny little iterations, and then attacking each little iteration with great strength because we're doing the same thing over and over and again. We're not trying to figure out where's the market now? How do we act now? What do we do now? Oh, we have all this large risk ahead of us, or now we only have a little risk. We never have that. We always keep the exact same thing. Always small risk, large potential profit, same strategy. We just have to make minor adjustments in terms of its width and how we approach that. And it works across the board. Now, we don't have to worry about the strategy itself. We only have to worry about our process and that we're doing the same thing over and over and over and over again. And there's a lot of different ways to trade the butterfly too. We could trade it this asymmetric way, which is by far the most advantageous way, and that's to push it out and turn it into this directional trade. We can turn it into a market agnostic trade where we can put it on both sides of the market and trade it so that whether the market goes up or it goes down, it goes towards our fly. So now we play both directions. Of course, that leaves the middle. That's something that we deal with. We could also trade it so that it's directly above us, which I think is the least desirable way. And that's the way a lot of people actually trade it for some reason. The least desirable way.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.